Welcome to the Health and Wealth Power Hour with industry expert and health insurance broker pro, Harlon Pickett. A show about how you can live longer with more cash and flexibility to really enjoy those years and never run out of money. Harlon will take your calls on a variety of topics related to health insurance, health care, retirement income planning, Social Security, thrift savings plan, 403B, 401k, or just about anything that gives you the tools to take action on keeping more dollars in your pocket and putting more dollars towards your retirement. He'll even share a few industry secrets if you listen close. And now, here's your host, Harlon Pickett.
All right. Welcome to the Health and Wealth Power Hour. I am the aforementioned Harlon Pickett. It is a blessing to be here with you today. I appreciate all of you taking time out of your day to listen and get more information. Know that here at the Health and Wealth Power Hour, our goal is your success. We're going to cover a lot of different subjects today, but first of all, I want to tell you a little bit about our past. You can't really know how to move forward in the future or who you're dealing with until you know the past of somebody. I'm very blessed today to have as guest two long-term friends of mine, and I want to tell you kind of how our relationship started. Back in 2008, October of 2008 to be exact, I met two gentlemen who had a big impact on my life. Between the three of us, we have just south of about 100 years of experience in this industry. And that means that both of them are pretty old. But I want to just let you know that that experience is not just wasted experience. That is experience learning about the ups and downs, the rights and wrongs, knowing how to help people in the very best way and putting people in a very advantageous position, both for today and for tomorrow. Once again, I am blessed to call these two men my friend. I call them many times my brothers because it feels like we truly are.
You're here. Yep.
Without any further delay, I would like to introduce Mr. Michael and Mr. William Strother.
Hello,
the
Harlon.
Strother brothers, if you will.
Hello, Harlon. Good to be here.
All right, great. Gentlemen, who would have thought in 2008 we'd be sitting in a radio station in 2021 sharing all the vast knowledge that we've gained over these years? But I cannot imagine a better place or a better medium than being right here, because our motto has always been service first.
Right.
And what better way to provide service than to put the information out there for folks to listen to both live, and then, of course, they want to listen to the recording later on. They're able to go and listen to this information absolutely free of charge, because that's what it's really all about. It's helping people.
Mm-hmm. Absolutely.
I look at all of the work that FESA has done over the last year plus in helping folks through COVID and the myriad of hurricanes that we looked at this past year in Louisiana and Florida, and the horrible situations that people found themselves in, and who was there to put that hand out, that helping hand, that helpful hand, but the Federal Employee Service Association, FESA. Never asking a thing in return, just making sure that folks could live for another day, could get by, could just know that they were not alone. And really, isn't that what it's all about? Making sure that people are not alone. Think about how many folks just get lost in the whole process of day-to-day living, and particularly in planning for their retirement. What kind of income they're going to have at that retirement. My gosh.
Sure.
It's such a difficult thing. Mm-hmm. I think we just heard some news that you'll probably share with us in just a minute, Mike, about what happened today.
Unbelievable.
And imagine what the roller coaster has been this last few weeks for folks that are looking to retire this year. Mm-hmm. And Mike, I really wish that you would talk a little bit more about how FESA gives that peace of mind to somebody that is looking to retire one day, right? Whether it's this year, whether it's next year, whether it's 20 years from now, we all need to know and have that peace of mind that we're going to be able to do that. The numbers now are staggering of how many people feel like they'll never be able to retire. And that's across all age groups. They just don't feel like they'll ever have enough money to retire. So I'd like for you to talk a little bit, Mike, about FESA's, the way FESA looks at this. FESA has a very unique way of handling these folks, of dealing with their situations, and really advising them on the best way to go about that. And obviously, everyone's situation is different, but there's still an overall service first and mindset that FESA goes in looking for the best way that you can never outlive your money. Mike, tell us more about that.
Will do, Harlan. Again, thanks for having us on. It is an exciting time at FESA. You know, as you well know, we were blessed through this horrific thing that is called COVID to over double in size because we have been able to reach out and help so many different people still be able to weather the retirement problems that they have in the middle of something as traumatic and tragic as the COVID virus. And FESA does approach things differently. Our service first kind of goes back to the way Will and I were raised, in that what goes around comes around. So it's always been our philosophy: provide a lot of help, a lot of service, and everything just takes care of itself in the end. FESA has positioned itself so that we do not have to send out invoices to people that we help. We never charge a penny for any of the assistance that FESA gives, whether it's filing a simple form or it's setting up a retirement income plan and everything in between. We've set this up so that we're actually paid by those that provide those supplemental benefits and additional benefits. So we're able to do a lot without ever having to make anyone pay for it. But FESA does approach things differently in that we approach everything through the benefits perspective. We are federal benefit specialists, and we're benefit specialists overall. But FESA, which is the Federal Employee Service Association, we work across the entire spectrum of all the different federal agencies, a lot of work with the postal employees. And, you know, I just want to send out a big thanks to all the frontline workers in the Fed, the VA, the postal workers, and everyone else that's been right there on the front working. And we have at FESA tried to assist and provide as much help as we can during this horrible time. So when we look at someone and working with someone, what we want to help them do is fully understand their benefits. Federal employees have a lot of benefits, but they do not have what we consider an active HR. Their HR was consolidated primarily for budgetary reasons back years ago in North Carolina. And if you have a question regarding your benefits, you got to call in there. But they really don't have people that can hold you by the hand and talk to you how your benefits specifically should work for you. So we want to make sure they fully understand them. We help them maximize their benefits. Let's get the most out of these benefits. Make sure they're not paying for benefits that they don't need. And then when they roll around to retirement, let's make sure you get the largest retirement income possible through your benefits and pay the least taxes. So we address this a little different because we start at the benefit level and make sure all those things I just said everyone can do.
And that's very interesting that you say that, because if I'm not mistaken, I can remember you telling me many times that what you run across, and this is just mind-boggling to me, Mike, is that many people are paying for benefits they cannot use. No matter if they wanted to or not, they simply could not use them. They're just putting money out, and there's zero chance they could ever get a return.
And that is correct. This kind of the standard rule of thumb is you're given a benefit packet when you first go to work with the federal branch, and that's it. And so you read it once, you make your decisions at that point, and usually you're asking a coworker, what did you do? And so, yeah, it is a sad fact out there that most employees, in not understanding their benefits, don't get the most and spend a lot of money they really don't need to.
Very, very interesting. I want to hear a whole lot more about that and a lot more about how FESA approaches this. We're going to take a quick break, Mike, and then we're going to come back to you and get a little bit more information from you before we talk to Will. Will, who is a expert and certified to help folks in Social Security. And it's going to be great to hear some information from you too, Will. So
Looking
don't run
forward
away,
to it.
buddy.
I'm here.
Don't run away.
I'm here.
All right, we'll be back soon. All right, we are back. Mike, guess what?
What's that?
Obviously, we have some interest about what you're talking about because Megan has some questions for you, buddy.
All right.
Megan.
Yes.
Megan, go right ahead. What is your question today?
How do I cancel my life insurance?
You know, that's an excellent question. And I suppose, are you a federal employee?
Yes.
Okay, great. All right, then let me kind of walk you through that. There's a form that needs to be filled out. It's a Form 2817. And while there are instructions on it, what I recommend you do is you go to gofesa.com and simply fill out the request form there. We'll not only get the form to you, but we'll have someone contact you and help you actually complete that form. But Megan, it's real important to understand anytime you cancel any insurance that's federally based, then you cannot replace that insurance. So we'll also kind of help you look at that to make sure you're making the right decision based on your insurance needs. We all need life insurance, and I understand not wanting to pay for insurance you don't need, and so we'll work with you on that end of it, okay?
Thanks.
All right. Take care.
All right. Thank you very much, Megan. Great. I have a kind of a follow-up question to that, though, Mike. I don't really understand why someone would just want to cancel their life insurance. Is there a certain reason why a federal employee would want to cancel that life insurance?
Well, let me tell you, it's a very interesting fact that every 5 years, their insurance premiums increase. And the older they get, the more substantial that increase is. And so the insurance it's a great buy, don't get me wrong. However, when you get up into your late 40s, mid 50s, early 60s, this insurance gets extremely pricey, especially she was talking about on the group life. They're normally talking about option C, which you can take up to 5 times your salary.
Okay.
So if you're making $70,000, you can get up to $350,000. Well, if you're up in your mid 50s or 60s, you may not need that coverage. That may be coverage you bought when the kids were young. You were covering mortgages or kids going to college. That's all past you. So you might not need that coverage. And again, I caution all the time, let's not just hastily cancel insurance because you can't get it back. But they can reduce their multiple so they can reduce their premium. There's a lot of options. But the sad thing about that premium going up every 5 years, they don't get a notice. They don't get a thank you. They don't get any idea. It simply goes up on their pay stub. And normally there are raises involved, so it kind of gets hidden in there.
Okay.
And then all of a sudden you look up and you're paying thousands of dollars a year for insurance coverage that possibly, in fact, you don't need.
You don't need. I guess you also could have chances where, like you said, you have family coverage. You don't even have a family that could be covered anymore because your kids are grown, right?
That's exactly correct. Now
Okay.
That's through another option. That's
Okay,
exactly correct.
great. Well, we have another caller for you, sir.
Okay.
Mr. Matthew is calling in. Matthew.
Matthew, go right ahead. What's your question today?
And my question is, why do some financial planners not like annuities?
Well, there's a lot of broad reasons for that. Annuities are designed best to help you in your retirement years, to provide a guaranteed income stream. And unlike financial planners who charge a fee each and every year to manage your portfolio, annuities don't. In fact, there isn't a setup fee, and there's not even a management fee each year. And so a lot of financial planners, they would be out of business if they all were offering nothing but annuities. So that's often, unfortunately, the case. But annuities, especially today's annuities, these aren't your parents' annuities. These are very sophisticated financial products that provide a lot of benefits, including a guaranteed income for life. But that's kind of the general reason a lot of financial planners don't utilize annuities with their clients when they are actually in the distribution or income phase of their retirement. Thanks for the call, Matt.
Wow. Yes, thanks.
And as I mentioned earlier, there's something that happened this morning on the stock market that folks that have annuities are not near as concerned about.
Yeah, and let me kind of back up real quick because that question kind of brings up a whole lot of information to talk about. When we're working with an employee, whether they're federal or non-federal, and I want to mention we work with the non-federal employees as well. In fact, we kind of grew into it. We've been helping federal employees, East Coast and West Coast, for now over a decade. And through their spouses or their kids or their relatives or friends or neighbors or whomever, we get a lot of referrals. And so we naturally started working with people in the non-federal market. And we're doing that today at a greater and greater volume every day. So if you're listening to this station, you don't have to be a federal employee to be able to work with us. And we use the same concept, service first, what goes around comes around. But annuities can be an absolute key part of a solid retirement plan, because an annuity is something that provides a guarantee for you so that when you're withdrawing funds, you have the confidence you cannot live those funds. And there's a lot of other reasons. I don't know, Harlan, you're familiar with the 4% rule, and that's kind of rhetorical because I know you are. And the 4% rule is pretty fascinating. A gentleman by the name of William Bengen actually developed the 4% rule back in 1994. And simply put, he determined that if you have a retirement fund, don't draw out more than 4% per year, and it ought to last you about 30 years. Okay? So most all financial planners use the 4% rule. That's just kind of the guiding thing that everyone uses. Well, the beauty of annuities, because of bonuses and because of guaranteed roll-up payments, you can actually get a higher payout than 4%, sometimes a lot more than 4%, and it's guaranteed for your entire life. So annuities just are overpowering in the retirement income world. Retirement income planning differs from financial planning in that we're concerned with helping you maximize that portion of your benefits so you get the largest income possible without ever having to put that money at risk. That's what the annuities provide. And there's a lot of other benefits that go along with that, Harlan.
Okay, great. I know of another lifetime income that you can maximize if you play your cards right.
Mm-hmm.
It just so happens that there's an expert in that field sitting right next to you, sir, and that would be Mr. William Strother, lovingly known to us as Will.
Glad to be here.
I'll tell you, there's just so many questions people have about Social Security. First of all, I don't think it's going to be around in the next couple of years, right, Will? Because they're going to run out of money and we're just not going to have it.
We hear that a lot.
Right. And obviously, from knowing you as long as I have, we also know that that's false. But can you tell us why that's false, and just tell us overall why Social Security is so important and how we can maximize that? Most folks don't even realize that you control so much of your Social Security, and it's just not thought about that way. So tell us share some of your vast knowledge with us.
Okay,
buddy.
I will. And I'd like to say that I'm a National Social Security Advisor certificate holder, which means I have gone through specialized training because it's so complicated. I mean, you just cannot understand Social Security as a layperson. And so that's why we're here. And I have colleagues across the nation that have that same certificate. And so I'm glad to share some important information today. But I want to go down memory lane for just a moment. The Social Security Act was signed August the 14th, 1935, and FDR was president. Now, in 1940, the first benefit check was issued. And we have the lady's name. I think that's amazing. I guess she gave her right for us to use it publicly, but her name was Ida Mae Fuller, and her benefit check was for $22.54.
Wow.
Yeah. So it's been around a long time. And I'm going to get to answering the question of whether or not it's going to be around as we grow older and our children grow older. By the way, at that time, age 65 was the only age that you could start your benefits. There was nothing, at 62 like we have today, and there was no reason to wait till 70 like we have today. There's over 70 million people that are on Social Security today.
Wow.
And we had 5,500,000 new Social Security benefits in 2021, where we are right now. And one other interesting thing, the average retirement benefit in 2021 is $1,543. That's the average. The high is up around $3,000. Now, to answer the question, is Social Security going to be around? You know, we've all heard it's going broke. The government just borrowed from it, and they can do that. They put out their IOUs. And so, you know, none of us have a crystal ball. But let me tell you some things, the reason I believe it's going to be around. First of all, it would destroy our nation financially.
Right.
If all of a sudden this money is not coming into all of these retired people's hands, then the GNP is going to get hurt hard. There's going to be a lot of problems that happen. But also, right now, if we didn't have the trust fund, which has billions of dollars in it, we're still meeting right now almost 80% of all benefits. So in other words, the money that's coming in today, not counting the trust fund, would pay about almost 80% of the benefits we're taking out. And here's what they're going to do, and we've already seen them start to do it. They're going to raise the retirement years. Right now it's age 65, 67, depending on your birth date, and they're just going to keep cranking that up. And that's going to make it more and more solvent. I believe Social Security is going to be around, and it's really important that you have the right plan of how to take it out. And I want to share this with you real quick, Harlan.
Okay.
United Income Wealth Management Company did a study, and retirees will lose an average of $111,000 in income per household over their lifetime because they took Social Security benefits at the wrong time.
Wow.
In fact, they go on to say only 4% of retirees took Social Security at the financially optimal age.
4%?
Yeah, 4%. So that's one of the things we do. You know, Mike was talking about service when it comes to federal and non-federal employees on retirement income planning. Well, Social Security is one of the biggest chunks of that. And we're talking about millions of dollars over a family's lifetime that they're going to get in Social Security benefits. And we do all of that for our customers at no charge.
That is unbelievable. If you will, when we come back from the break, what I'd like you to do is give us just a couple of examples of things you can do to maximize that.
Excellent.
I understand the very biggest thing you can do is get a maximization report.
That's right.
And I understand you can get that for free too. So you'll tell us more about that and tell us a couple of those quick tidbits to give us a better idea of how to maximize our Social Security.
You got it.
We'll be right back. Hey, Will, remember when we first met, we were at that, I think it was at Embassy Suites, wasn't it? That was
No, it was a Crown Plaza.
Crown Plaza.
And it was here in Houston.
Yeah.
On I-10 near Highway 6.
Yeah.
And
That's
Mike
right.
was there too.
Yeah, Mike was there too.
Remember?
2008.
Yeah.
I remember it well. More time flies when you're having fun. Now, you said that item A got $22?
Yes.
Okay. And the average now is $1,500.
Yes.
I think Ida probably got more money than the net
More
worth.
disposable.
More
Yeah,
disposable income than what we're getting today. I think Ida May's ahead of the curve there, I believe.
At that time, you're probably right. That 22 was probably worth a whole lot more than what ours is today.
That's exactly right.
Oh, the good old years.
Yeah, exactly. Exactly. I think it's very interesting too that, like you said, we were actually allowed to use her name, or that her name's out there, and there's the possibility of knowing who the very first person to get that check was and exactly how much it was. Yeah. That's pretty cool.
It really is. It really is. And Harlan, if I could jump in real fast and say, I want to give a big shout out to Nicole Stanley.
Okay.
She has been so, as you guys know, instrumental in putting our radio show together, and so much in business development, helping with all of the COVID issues, getting the mask out, the hand sanitizers, the generators during the hurricane. So she is our director of business development, and I just want to give a shout out to Nicole Stanley.
Yeah,
Hey, go
absolutely.
Nicole.
Absolutely. It is. I think that they're probably going to name a section of I-10 between Houston and Baton Rouge after her, because she spent more time on it than a truck driver, I think, in many cases, getting supplies to the folks over in that part of Louisiana. I know she spent a lot of time over there truly rolling up her sleeves, and in some cases having to roll up her jeans to walk
That's
through
right.
some bad situations
You're
to make sure
exactly
folks
right.
had the supplies that they needed, whether it be water, whether it be generators, whatever it was. It's just unimaginable the situation so many people found themselves in.
Absolutely.
And what a blessing to have someone like Nicole to go over there and represent FESA and get those things out there. So great call. All right, we have a caller again. Mr. Eric is calling in. Not sure what Eric has to ask us about today, but go ahead, Eric.
Good afternoon, gentlemen. Thank you for taking my call.
Hello.
Hello. Got a couple of questions, and they're not related to each other, but one, thanks for all that y'all are doing and trying to help let people understand that each situation is going to be different, depending on the person and where they're at and so forth. My first question is a Medicare question.
Okay.
My age, Social Security, disability. Thought I was going to be on Medicare, but I am not. Why or why not? And if there's a time frame or something to that, that's the first question. The second is unrelated to it, but it has to do with being a small business owner and being able to offer employees benefits and what's out there for the small business owner that's affordable, so to speak, but also help out, the businesses that have 2 to 10 employees or 10 to 15 or, that kind of thing.
Okay, very good question, Eric. So if I understand you correctly, you are currently on Social Security disability, but you are not on Medicare, though you thought you were going to be. Is that correct, sir?
Correct.
Okay. Are you recently on Social Security disability?
Within the last couple of months.
Okay. All right.
Yes.
Well, therein lies the issue. Whenever you start Social Security disability, you have a 24-month waiting period to start Medicare, and it will start automatically. Now, here's the crazy thing about that. It's going to start whether you want it to or not. And if you're not prepared for it to start, then you could be in for a rude awakening. Right now, because of your lower income, and I'm guessing on that, since you're on disability, you cannot work and receive a certain amount of money or else you would not qualify for disability anymore. Because of your lower income, you may very well qualify for an Obamacare plan. Now, while those plans are not for everybody, for someone who is lower income, they can be a great option. And we just happen to be in a COVID special enrollment period that works just like a regular open enrollment period, and therefore we may be able to get you set up on a plan at a lower rate that you can afford. Now, why that can also be a negative is when your Medicare starts at 24 months, if you don't know what's going to happen, you could go in for a doctor's appointment and find out the wrong way. You thought you had an Obamacare plan and find out it's been canceled because you're on Medicare and you didn't even know it. And Medicare is basically an 80-20 plan, and now you're paying 20% of what your visit was when you thought you were going to pay a $0 or $5 or $10 copay. So it can be a rather rude awakening. Now, on the second...
Is that what you mean by being prepared?
That's what I mean about being prepared, yes, sir. That's why it is very beneficial for you to have someone do a personal benefits analysis with you to make sure that you're in the best position. You can go out to gofesa.com, fill out one of the forms on there, and we will contact you about your situation and make sure that you are given the best advice. As for your other question, small business owners do have options. And in fact, one of the things that Eagle Care Health Solutions, a sister company to FESA, offers are small group plans, even if your employees or contractors are 1099. We can still take care of those folks. Very unusual in that market. So most of your employer plans cannot cover 1099. Eagle Care Health Solutions has products that can do that. And we're talking about good quality plans like HSAs and copay plans, also some that utilize DPC, direct primary care. Lots of great options, lots of good tools to use. Once again,
So
go ahead, Eric.
is that kind of like a group plan as a 1099?
Absolutely. It is a group plan. There is a plan sponsor, so the company would be offering that to the employees, in this case contractors, and the company itself would be responsible for making that payment and then gathering the funds for those costs from the 1099s. However, it is very, very unusual in that market to have it. It is a great way to attract and keep employees. There also is a myriad of other benefits that they can offer along those same lines. And we're seeing more and more companies switch to 1099 and therefore set yourself apart by having something such as Eagle Care Health Solutions. And you can actually go out and check out that product too at the eaglecarehealth.com. That's eaglecarehealth.com. Also, all the different social medias, both Facebook, Instagram, also Twitter. Thank you so much for your call today, Eric.
Yeah, I had a follow-up to it real
Okay.
quick. Just open enrollment on that. Is there any time for that, or is there a specific time for businesses?
Yeah, right now the COVID open enrollment is from February 15th all the way through May 15th. So you have until May 15th to get that done. And if you are without insurance right now, then I would recommend that you go out to gofesa.com or to Eagle Care and submit a form to us so that we can get with you right away and get you set up.
I appreciate the time, sir.
Yes, sir. You have a blessed day.
Thank you, Eric.
Harlan, real quick, let me make clear for everyone out there, whether it's a health question that you have or any benefit question that you have, that's one of the things that we will do at FESA and at Eagle Care is provide a complete benefit analysis so that you fully understand your benefits and know where there's any gaps or if you need to do anything to be better prepared. So it doesn't matter if you're federal or non-federal, go to gofesa.com, fill out that form, and one of our benefit specialists will give you a call, and we're able to handle everything over the telephone. We do not have to sit down, and I know for COVID that's a great relief, and for us it allows us to reach out and help more people all across the nation. So again, gofesa.com, fill out that form.
Hey, one of the things I want to point out, being in this industry, both of you guys know what happens when people go out onto the internet and fill out a form. 1 million people start calling them, right? All of a sudden, everybody who's ever got an insurance license in the world has got your phone number and starts calling you. One of the things that absolutely will not happen is that. FESA is not selling your information. Eagle Care is not sharing your information. That information is coming directly to the company, and you will be contacted by somebody from FESA or Eagle Care Health Solutions to help you with your individual need. No one else is going to be calling you from some random company trying to sell you something. We're not even going to call you and try to sell you something. We're going to make sure that you get the information you need about your benefits to make sure that you're in the best situation for you and your family.
And Harlan, well, there's a lot of names out there, a lot of different acronyms. We're FESA with the Eagle and Eagle Care with the Eagle.
That's right. That's right. All right. We have another call. And my understanding is that this one is for you, Will.
All right, fantastic. Bruce, good afternoon.
Hey, good afternoon. I've got a question for you about Social Security.
Okay.
And the question is, if you're divorced from someone and they pass away, can you somehow get a survivor benefit?
That's a great question. In fact, it's one that most people overlook. And yes, to answer your question, it's called the Divorce Survivor Benefit, and it works just like the regular survivor benefit. Now, there's a few rules involved. You had to be married for at least 10 years before the divorce, and you cannot currently be married. But if you're single, you were married for 10 years, your divorced spouse dies, then you can get a survivor benefit as early as age 60. Now, you would have to undergo the annual earnings test, so if you're working, making a lot of good money, then applying for it that early probably wouldn't make sense. But yeah, age 60. And let me tell you all something real fast about the survivor benefit. Unlike the spousal benefit, the survivor benefit, you get 100% of that person's benefit. So in this case, you got a divorced spouse that died. If their Social Security benefit was $2,500 a month and you qualified for the survivor benefit, you would get $2,500 a month. And one of the things you can do, whether it's a divorce survivor benefit or survivor benefit, is go ahead and claim and then let your account grow. And it'll grow at 8% per year from your full retirement age, which is age 65 to 67, depending on how old you are. And then it goes all the way to age 70, growing at 8% a year. So a lot of our clients, unfortunately a death's involved, but they'll use that survivor benefit, let their account grow, and then at age 70, switch over from the survivor benefit.
That is great information.
Thank you, Bruce.
Hey, thank you so much. I appreciate it.
Good deal. All right. It is time for us to take another break. And gentlemen, when we come back, I have one follow-up question for that you just answered there, Will.
Okay.
And I want you to be thinking about this one. I hear this all the time. I can't start taking that because it's going to take away from the other person's Social Security. I just heard someone the other day say, I can't start taking my spouse's because it would reduce his. Think about that one for me. I want you to tell us all about that when we come back.
I'll do it.
We'll be back. All right, and we are back. Mike, you had a great story about a lady you ran into in Louisiana that fit a pretty interesting situation. And if I recall, she had been married 3 different times, and because of the length of her marriages, she qualified to get benefits from any of those husbands or the deceased husbands, right? Is that the case?
Pretty much that's the case. Yeah, she was quite the interesting client to work with. And, she was married to 3 different people for 10 years plus in each case. And so she basically gets to sit back and choose which one of the larger plans that she wants. And I asked her at the time, I said, what did you do? Meet the second husband while you were with the first husband, just as a joke.
Right.
And she just winked at me. So I don't know how that all worked out, but I know she has a cafeteria plan on trying to figure out which one of the benefits she wants to draw.
And if I understand right, Will, Social Security will pretty much do that for you, right? If you are registered with Social Security, they'll make sure you get the maximum benefit based on what the history that you put into your account. Is that correct?
Well, that's true. In fact, I encourage everyone to go to ssa.gov, that's Social Security Administration.gov, and get your online account. You've heard about people that steal Social Security numbers. If you have an online account, it is a little more defensible. In other words, it's harder to steal.
Sure.
And so you need to do that. In doing that, then they kind of know, who you're married to. If there is a divorce, sometimes they know it, but sometimes you need to let them know. And it just makes it easier. And Harlan, to answer your question right before break, and I'll use this example, the lady is married 3 times. She's going to be able to choose the highest income potential. But the Social Security Administration is not allowed to give advice.
Right.
Okay?
Right.
I mean, they just cannot. They can tell you things, but they cannot give you advice, when to claim, which husband to choose, etc. And also, for spousal benefits and divorced spousal benefits, including the divorced survivor benefit, it does not hurt the person that you're claiming on.
Okay, so no reduction in their benefits.
That's right, no reduction in their benefits. And you can actually have, let's say you had a lady that was divorced twice, there could be 2 men getting a divorce spousal benefit on the one lady, and it would not hurt her situation.
Okay, all right, great. I believe we have one more caller today, and that is Joy. Joy, what question do you have for us today?
Hi there. Earlier, you guys were talking about insurance and such, and I had a question. I was wondering if an HSA, how do you know if that's right for you or not? Because I'm not sure.
That's a very good question, Joy. HSAs are an interesting product, and I think a lot of people were lost in the 80s on an HSA when if you didn't spend the money that you had in that, then you lost it at the end of the year. These are not the same. HSAs have evolved. They roll over every year, and you can really think of it as a retirement savings account too, because when you're 59 and a half, it can have the same attributes as an IRA. But I myself believe that HSAs are great for two groups of people, and it's very different two groups. One is a very healthy family that is really getting nothing but their preventatives done, and they want to make sure that they have catastrophic coverage. The other is a group that has a lot of things wrong. Somebody who potentially is fighting cancer or fighting something very serious. And the reasons for the difference in those two is one is truly a catastrophic plan. The other one is someone who is going to reach their deductible every single year. And because HSAs are a lower cost plan, it's a great fit. You're paying less for your plan. You know you're going to reach your deductible. And now all of that is tax deductible. What a wonderful thing. To find out whether an HSA is right for you, I would really need to talk to you more about your situation. I mean, choosing an insurance plan is a very personal choice for somebody, and they really need to make sure the plan is best for their family and what their family dynamic is. So I would highly recommend that you go out to Eagle Care Health Solutions or to GoFESA.com and fill out one of the contact forms. Now, in your situation, depending on if you're a small business owner, Eagle Care also offers a HSA option for its small employers. So if you happen to own a business, Joy, you could offer that just to you and your family, or you could offer it to any employees that you have too, even if you're 1099.
That could actually be helpful because we are 1099.
Okay, great. If you want to learn more, I really highly recommend that you go out to eaglecare.com, eaglecarehealth.com, or gofesa.com and let us sit down and talk to you once again via phone or Zoom meeting, and we can get all your questions answered and see what we can do to get you set up.
Okay, thank you so much. I'm going to do that.
All right, great, Joy. Thank you so much.
Thanks, Joy.
All right, guys, I just can't tell you what a joy it's been to sit down and reminisce with you a little bit and spend this time.
Been a blast.
There's just so much that FESA and Eagle Care have to offer so many different people. It is really a blessing to be involved with an organization that truly is service first. And I'd like to give each of you an opportunity for any comments that you'd like to talk about. We just have a few minutes left. Mike, anything else that you want, any words of wisdom you want to leave us with today?
Well, let's see. You were talking about an event earlier today. The Dow dropped over 700. And when people are really seriously looking at retirement, if you're in that age 55 or more, that's a retirement red zone. You need to start thinking retirement. You need to go to gofesa.com and let one of our benefit specialists approach it from our unique way. And let's just make sure that you've got the financial peace of mind and the style of income and lifestyle that you want when you retire. And we're able to do that and provide it on a guaranteed basis. So I just encourage everyone, take that step, go to gofesa.com, let one of our benefit specialists help you. We never charge a penny.
Great. Thank you so much, Mike. Will, how about yourself?
Well, I want to talk about Eagle Care Health Solutions because I'm so proud of it. To let everyone know that's listening, it is new. Harlon is our point man on that. He put it together, and it's amazing. That's no way I can describe it. You know,
Absolutely.
Harlon, kind of using your own words, you said if someone's real low income and they're on Obamacare, then this probably isn't for them.
Right.
But if they're making enough money that they're not getting a big subsidy, then when you compare this to normal major medical health insurance, we're looking at about half the price.
Right.
So can you tell us something about that? Because I am so excited about it.
Absolutely.
Yes, sir. We looked at what the true needs were for folks out there that were making good money. And it's kind of funny. Making good money is a relative term, right?
Right.
But you really don't have to make a tremendous amount of money to all of a sudden not get a huge tax credit. And if you're not getting that tax credit, then paying $1,500 or $2,000 a month for your family's insurance, it's eating up the vast majority
Right.
of your income. You make $60,000 a year, and all of a sudden you don't have any of that left because you're paying so much money towards your insurance. And we looked at what the needs were. So we made sure that the plan filled the needs all the way across the board, from folks that were completely healthy to folks who still had some chronic illnesses such as diabetes. Anyone can get on the plan. Is it a good fit for every single person? Absolutely not. But it is a good fit for a lot of people.
Right.
And it is a money saver. It allows you to do exactly what we're talking about today, and that is keep more money in your pocket so that you can better plan for your future.
Right.
That is the biggest reason why people don't save, why they're not ready for retirement, and why the majority of people to this day say they'll never retire, because they have no extra income. If I have no extra income to put towards retirement, where do you start cutting?
That's right.
And so I am very proud of Eagle Care Health Solutions. I am very proud that FESA gave me the resources to put that plan together. And I think it is going to be a game changer for a number of families that finally have something that allows them to access the health care that they truly need. Because it's not health insurance, Will. It is not health insurance. It's better. It gives you direct access to what you really need to the healthcare industry. Once again, we are super, super excited that we got to be here today. I want to once again thank my brothers from another mother,
There you go.
the Strothers, for being here, for sharing all the great information about FESA. Join us every Thursday from 1 to 2 p.m. Central Time. Thank you so much for the Health and Wealth Power Hour. Our goal is your success.